All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. As you can see today, we're going to be talking about this resistance breakout. All right. In this, by the way, I want to try a new thing with these streams here. I want to try to really lean more toward the educational side rather than just the Q&A side, because whenever I get to the Q&A, which we'll talk about in a minute, that's when people start to tune out, right? So I want to make these streams a little more valuable. And that's why today I want to really get into this topic of breakouts, right? So if you're new to the stream, welcome. Hey, thank you for all my regulars joining me here. We got Alex, we got Glenn, good to see you. Raman, Jay, good to see you all. Mr. Plow, Sean, cool, Sean, I'm glad you mentioned that. We're going to talk about that. Good to see all that. Also, hold on, let me just make an adjustment here. I am on TradingView and I am streaming there. So if you're watching me on, oh man, I put the wrong chart up. Hold on a second. Where's my, hold on a second. Let me pull up my TradingView thing over here. There we go. So I can see what's going on there on TradingView. All right, by the way, TradingView people, if you're watching me, if you can only hear me, please make sure to press the refresh button, right? And that usually solves the problem. Okay, cool. So now I'm just watching what's going on over there. All right, everyone. So again, welcome. If you're new to the stream, here's how it works. So first, I'm going to go over the economic calendar. All right. Okay. What does that say? All right. I'm going to go over the economic calendar, right? TradingView has its own economic calendar. So I suggest you use that to follow along. Then I'm going to go over the Bitcoin analysis. As you can see on my chart here, I'm going to make the chart bigger. Don't worry. As you can see on the chart here, it's on the verge of this breakout, which I wrote about in my article yesterday. I hope you all checked that out. And then after that, I'm going to go into the Q&A portion where I can answer your questions about stocks or altcoins. So if you have a stock or an altcoin, you can put it in the channel now. Now, I'm going to spend a little less time on those because I want to spend a little more time on the educational aspect of this, okay? If it's an altcoin, by the way, please put USD or USDT after the symbol so that I get it correct. And also, just as a fun fact, if you'd like to share what country or what city you're from, that's always a cool thing to know. Okay, I'm streaming from the greater New York City area, also known as Northern New Jersey. And that's why I talk funny sometimes. All right, anyway, so let's get this thing started, shall we? Let me pull up the standard slide here. Just give me a second and I'm going to pull that up. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, again, I hope everyone enjoyed their holiday. All right, and we're going to get this thing started now. So first thing I want to mention, let's talk about the economic calendar. Have you guys prepared? Have you guys checked the calendar? Every Monday, you should check it. All right, so we had a couple of interesting items this week, right? We have what? Can anyone want to chime in on that? Anyone want to chime in on the economic calendar before I start laying into it? And you guys, you should be checking that economic calendar every Monday, especially if you're in Forex pairs or you're in stocks that are very sensitive to economic news, because things can change very quickly as a result of a surprise. Okay, that was unexpected. Yes, Alex, you got it. So CPI, right? That's the first one. I believe that's on Wednesday. Today is the 10th, so I believe that's the 12th, right, on Wednesday. So no, Glenn, there's no Fed speeches this week, but there is FOMC meeting minutes. That's not a Fed speech, but that's the minutes that come from their meeting, right? And there can be surprises hidden in that report, and it can move markets. I've seen that happen before. So that's on both of those. CPI and FOMC meeting minutes are both on Wednesday. The CPI, I believe, is at 8:30 a.m., I believe, Eastern time, or maybe 10 o'clock. It's at one of those times. The meeting minutes is at 2 p.m. Eastern time, okay? So if you're sitting there watching a chart and there's a sudden move and you're like, what's going on, right? It could usually, those type of reports can be the catalyst for something like that. So it's very important to be aware of them. The goal is not to try to figure out the report. In fact, I want to talk about NFP here, which came out on Friday. I want to talk about that for a moment, but let's continue with this calendar. So maybe make sure that we're aware of all the other events this week, right? So we got the FOMC meeting minutes, And then I think on Thursday, which is the 11th. No, I'm sorry, the 13th. We have the Bank of Canada, I believe, is coming out with their rate announcement. That's usually not a global mover, okay, Bank of Canada. But if you're in a pair that's crossed with the Canadian, it can have an effect, right? So be aware of that, but it's not a big market mover. On Friday, we have another report, right? What was it? It was like, I think was it the PPI? Or there's another report on Friday. Who can tell me what it is? Yeah, core PPI. Thanks, Levant. So core PPI, that's a mover. That can be a mover. And also I believe there's Michigan consumer sentiment. That's all on Friday. Michigan consumer sentiment is usually not a big mover. Okay, so it's really the PPI. So there's plenty of events this week. There's quite a number. And there's some other events on the calendar as well that I'm not even talking about because they're not even worth talking about. All right, they're usually non-events. Now, on that note, let's jump back to NFP, right, which came out the Friday before, non-farm payrolls. Now, when these numbers come out, right, I don't look at the data. I don't sit there and let me scrutinize the non-farm payrolls report so I can feel smart, right? I don't do that. What I look at mostly is how the market reacts at that time, okay? And it's usually not at the time it comes out. I usually check an hour after it's come out. So 9:30, I'm looking, how's the market acting right now? And more importantly, I'm looking at how the market closes that day, okay? NASDAQ closed strong on Friday, right? And so we can talk about NFP and argue, oh, surprise, oh, this, oh, but you're inviting logic into the conversation. There is no logic. The market processes that information the way it wants to. I look at the dollar, I look at the NASDAQ, I look at the bonds, I look at the S&P, I look at the euro, right? I'm looking at these things. I look at gold, I look at Bitcoin. How has price processed this information? That's all I'm interested in. Okay, the NASDAQ closed strong on Friday. Now today it opened weak, and look where we are now, right? So it's interesting, right? So my point there is don't let logic cloud your judgment, or don't let logic get in the way. You have to let the market figure it out. That's a very key thing. By letting the market figure it out, you're accepting the fact that markets are random. You are accepting the fact that the efficient markets hypothesis is in play. You must accept that. If you do not accept efficient markets, you will fail most likely. Now, I know there are arguments against efficient markets, and I trust me, I understand. And yes, markets are not 100% random, but they're getting more and more efficient each day. They're a lot more efficient than they were 10 years ago. So efficient markets is a very, very important thing that you need to embrace, especially as a short-term trader. What that helps us do, it doesn't help us make money. Okay, that's what everyone says, well, does it help me make money? Then I don't need to know it. It's not about that. It helps you keep an open mind and understand that anything can happen and that you don't get tied to an opinion. You don't get married to an opinion. You cannot. I see this all the time, especially in this space. I was just watching a fake guru the other day. I mean, it's this space. The most successful guys in this space are the greatest liars. It's unbelievable, which is not very incentivizing for me. Okay, especially since I go the honest route. But people want to be lied to. We all go through that, right? We want to be lied to in this game, and the guys that lie the best they're the most successful. They have the largest amount of followers and all that other stuff because they tell you what you want to hear. You know how many times I've been asked questions, well, how does this work? And does your system make money 80% of the time? And I come out and I'm honest. I'm like, well, not all the time. Sometimes, if the environment is a certain way, we're looking at a 50% probability. I never hear from them again. Okay? Because I'm not telling them what they want to hear. I'm telling them reality. No one wants reality. Okay? And that's what I deliver. That's why my following is so small. And people that are more on the realistic side don't get much traction. Okay? So like I said, it's not very incentivizing for me. Anyway, all right, enough ranting. Let's get into the charts, right? So let me make this chart bigger. And so we can start talking about Bitcoin here. Hold on a second. Let me just make this a little bigger here. There we go. All right, you should be able to see my chart now. Now, for those of you checked out, who read my TradingView article here? I hope everyone. And by the way, if you can, do me a favor, press the like button, press the boost button, press the subscribe button. It helps my channel. I mean, I'm not asking you guys for donations, but the least you can do is, press these buttons if you like my content. All right. It's very helpful for me. And it lets these algorithms know that my content does provide some real value. And it's not full of lies like all the other nonsense out there. All right. So cool. All right. Thanks, Alex. So my article on TradingView, right? As you can see, I changed my map, my roadmap here. If you go back a couple of weeks ago, I had the roadmap pointing to this 25K support, right? I changed it yesterday, and look where the market's going. Now, this is not an absolute forecast, right? Now, before I talk about this here for a moment, right, and we're going to talk about this breakout situation and how to deal with this breakout strategy as a trader and the kind of things that you should be considering, which are not going to be obvious. I want to point out my trade scanner. Okay, now the trade scanner for Bitcoin has now been in operation for about 2 weeks. And as you can see, Sean mentioned here, nice auto setups, solid work. He's talking about the trade scanner. Okay, now the trade scanner called Bitcoin long at least 3 times over this 2-week period. All right, I remember one of the prices specifically, 27,962. We are now at 29,182. Okay, my trade scanner called it long. It has not called any shorts. In fact, my trade scanner, I would never call these longs that it's called. I would never call them myself as a swing trade because this location is not exactly the best location for swing trades. Okay, so we're going to talk about that. But the trade scanner can be used for smaller time frames. Like I've been telling people, I have to train people on how to use that thing. It's raw trade data. And it's basically what it's doing is it's finding changes in momentum, and then it sends out a notification, right? But those changes in momentum have to be on the side of the broader trend. My scanner is not going to call Bitcoin short, okay? It's not going to call, during all this nonsense over here, all these red candles, it's not going to call Bitcoin short. In fact, I called Bitcoin short back here, right? This was the FOMC meeting, right here, back here. I called it short. The short became active at 29.6 if anyone had taken that. I hope people got out of that thing by now. But that thing, the stop on that thing was 29.5, and that's a 3,000 point loss. Now, I warned about that in that trade idea. I warned about that. It was highly aggressive counter trend trade, and that trade tapped in at the bottom of this move and just has been red the entire time. There's been plenty of opportunities to get out. I haven't called an exit because I'm not in those. I don't take those short trades personally, but people want aggressive trades. I called one, right? So that trade was not very profitable, to say the least, okay? But the trade scanner, on the other hand, has been calling longs. And there was, while trying, making 1,000 points on one of those is not a regular thing to expect. If you're getting away with a couple of 100 points, there were plenty of opportunities to do that here, then you're doing your job, right? A couple of 100 points is not bad, especially if you're only in it for a day, because the trade scanner, the window, the time horizon for that thing is like 1 to 3 days, right? You don't really want to expect more than that, although it can happen. We want to keep risk most optimized, right? So anyway, I just want to point that out again, because now that I don't know the most recent price on that thing, I haven't checked, but I know it called it again somewhere in the high 27s, and there's about 1,000 points in this thing. So nice job on that thing. What I like most about it is it's calling trades that I would normally not call because it's programmed to see certain things that I normally can't stay on top of myself, right? That's the whole point of automation, the robot. No one trusts the robot, but the robot's doing a pretty good job, all right? And the stock side, we haven't even talked about the stock side, all right? I have a stock one that just takes care of stocks, and I've gotten lots of good reports on that one, right? They're not perfect. It's not 100%, but I'm just letting you guys know. All right, if you guys have more questions about that, you know where to find me. Send me an email, reach out to me on the platform here, go into the community. There's links in the description. Check out the free community, whatever. Send me a message there, and I'll be happy to explain it further. Okay, I bought monthly, and also I wish BTC under 20K. I'm very happy with what I bought. Okay, yeah, 20K. I'm not sure. I mean, look, the structure is not there right now for that. All right. So anyway, so let's get into more of what's going on here in this situation. By the way, with the trade scanner, I just have to mention this one thing. You can use 1 hour, you can use 4 hour, or you can use the daily chart to manage the risk on those trades, right? The whole name of this game is managing risk. Everyone wants to hear profit. Everyone wants to hear strategies to make more money, right? If I put that under the title, I'd probably get 1 million people watching me here. Strategies to make more money. It's complete nonsense. That's why everyone fails, okay? The name of this game is managing risk, focusing on risk, identifying risk. If you're a beginner, if you're like a brand new person, right, been at this maybe a month or something, the trade scanner is you're not gonna understand how to use that raw trade information, right? You need at least 6 months to a year because you need to understand how to place orders, right? That's really the key thing. And placing orders, you should understand how to manage risk through order placement. That's the first thing you should focus on. Everyone goes toward analysis, right? And really the first thing to learn about is really the academic stuff, which again, no one wants to hear about, like efficient markets and random walk theory and all those things. That's really what you should learn first. And then you really should be focusing on orders, right? And managing risk through proper order placement, okay? Whether you're a day trader, swing trader, like that's really what you should be focusing on. No one wants to hear about that. Oh yeah, I know how to set a stop. Yeah, whatever, right? Show me how to make money. Making money is in minimizing your losses. That's where money comes from. All right, anyway, so enough of that rant. Let's talk about Bitcoin, shall we? So, all right, first things first. Again, I wrote in my article yesterday on TradingView, I described this situation. And I said, basically, we take out these 29s, right? We were on the verge of a breakout. When I wrote that article, we were right here, right? We were fooling around in here. And I saw that. I'm like, all right, first of all, we have a bullish structure, right? This structure has not changed since going back to what, early March? This is clearly a bullish structure, short term. This is bullish. There's nothing bearish about this. Now, believe me, if I see something bearish, I'm all about it, right? I've had bearish calls. I've been, bearish when the market was bearish. This is a bullish structure. Can't argue with it, right? So as long as that's the case, if you got people coming out telling you, oh, double top, they don't know what they're talking about. So we have a consolidation at a resistance level within a broader bullish structure. Now, when markets are weak, right, a weak market, when it touches a resistance level, what usually occurs there? Who wants to tell me? What happens? What is reasonable to expect at a resistance level? Can anyone tell me? This is the interactive portion of the session here, right? This is how you guys learn. I have to ask you guys questions. Don't be afraid to answer. There's no wrong answer. I'm not going to make fun of you. Okay, it's okay to get it wrong, but what is reasonable to expect at a resistance level? Who wants to tell me? My students should know this. Levant, right? Selling activity. There's a higher probability at a resistance. Now, this is common sense stuff. A beginner should know this, right? At resistance level, price gets stuck at a resistance typically because there's more sell orders there. Okay, that's why there's resistance. That's what resistance is. A vertical candle. That's Kai. Yeah, I know, Kai, making me laugh. If you weren't Kai, I would have yelled at you. Anyway, so resistance, right? So selling activity is very likely there. Now, here's the thing. This is where it gets confusing. Resistance areas are places to sell, not really to buy, but we do have bullish breakouts of resistance. This is where things get tricky. So when you consolidate, and this is one of the points that I want to make, when you consolidate at a resistance in a broader bullish trend, I mean, this thing for 2 weeks basically has been between 26.5 and 29, right? That's basically, and now it's starting to break out now. We haven't cleared the range yet, but look at that candle, right? So when it does something like that, that's a sign of strength because a resistance should be rejected quickly, right? Look back here. Resistance rejected quickly. And that was a couple of thousand points. That was 3,000 points. In fact, I was short. I called a short for that one too, which happened to work out very well before the squeeze, right? And this was the banking squeeze. This was the instability banking system, blah, blah, blah squeeze, right? So resistance levels, price should reject swiftly and there should be follow through. We should not see a consolidation at a resistance level. So right there, the gears should be turning. You should be like, this thing's not selling off from the resistance, right? So that right there tells you a few things. Shorting is probably a bad idea, although it's not, it's aggressive. You can think of it as it's aggressive, which means if you take a short and it gives you a hard time, like this one, right? If we want to talk about the short that I mentioned back here, right? This short was given a hard time for 2 weeks, shorting at 26.5. This thing has been nothing but trouble, right? So that's certainly not a short that you want to add to, definitely not. And you should be looking to get out of it somehow or mitigate that risk, which means you want to try to take the smallest loss possible or something, okay? But if you're not typically into aggressive trades, you shouldn't take it to begin with because it's not a conservative trade. Now, so there are signs there that this thing is not being rejected. Now, here's the thing. You're at a resistance level. And you know how, you guys, most of you guys know, I'm not a big proponent of breakout trades, but that's a common strategy that's particularly taught to new people. Okay, how many times do you hear that? Oh, I'm going to teach you the breakout strategy, the only one you ever need to know, and you're going to be a billionaire by tomorrow. How many times have you guys heard that? Right? So let's talk about this breakout situation. Right? What's the problem with the breakout? Well, it's a resistance. So right off that, right, because of the location, which is a resistance in a bullish trend, we should know that the probability of follow through just starting out with this thing is going to be lower. The probability of a fake out is greater. It doesn't mean that it's going to go the way we think. So this is not about thinking, right? I drew this line here, right? This little roadmap here, this little illustration, but this does not mean that that's what I'm expecting exactly. This is one possibility of infinite possibilities. The market may agree with this roadmap, it may not. But this is not something to cling to and be like, oh, it's going to 33K, so it's a good trade. You have to look at the location and you have to consider the probability of the location. This is a low probability location. So if you take a trade, what to do here? All right, so here's the lesson. Here's what I want you to take away from this. If you're in a low probability location, like a resistance level, even though the trend is bullish, you should expect less. So right from there, that thought shapes everything else you do from here on. So, okay, if I'm expecting less, what should I do? Well, for one, you shouldn't take a swing trade here. Okay, it's high risk. If this thing fakes out, you're looking at, your stop is going to have to go somewhere below 26.5. So you're looking at 3,000 points there, right there, okay, which I think is kind of high, or possibly more than that, right? So what to do? Go to smaller time frames because the risk on smaller time frames theoretically should be smaller, right? Your stops are going to be in tighter spots, but your profit expectations will be adjusted proportionally as well. Does that make sense? So let's talk about that here. So what I'm saying is, and I explained this in my article briefly, you want to work on smaller time frames. And if you're going to be more conservative here, the swing trade is out of the question. So you should not have a 2,000 point stop and a 4,000 point target. You can do it, but the probability of that is low. Okay, it can happen, but you're taking a big chance, right? The name of this game is trying to find probabilities that are more favorable, right? And I can compare this to poker, right? This is very common situation in poker, right? You got a lousy hand, but there's a probability that you can win with that hand, but it's a low probability. So if you keep playing that hand, right, out of 100 times, it's not a profitable hand. But 2 or 3 times, or maybe 10 times, it's profitable. You cannot be fooled into thinking that that's a good hand. It's a garbage hand because most of the time it fails. It's the same situation here. People don't realize that. They only look at the one isolated situation. Oh, it broke out and it ran 3,000 points. Yeah, that one time. But how many times does that happen over 100 instances, right? If there's a low probability of that following through, why would you have those expectations? So you shrink your expectations, okay? So that means no swing trades, you go to day trades if you want to work on the long side of the breakout. If you're going to go to day trades, That means you're not using a daily chart. You have to go to a smaller time frame. Let's go to a 4-hour chart. Okay, I normally don't go through this on these streams, but this is part of the lesson here. All right, so now on the 4-hour chart, we're getting more detail. The purpose of this, though, is to find structures that we can define our risk from. And the question is, do we want to take this price now? I mean, look, it's breaking out, right? Do we want to buy it right now? The answer is no. Okay, because I mean, you're taking all the risk. Someone bought it at a better price, and all you're doing is coming in and taking it off their hands, right? You're assuming the risk at the worst price, and that person is getting away with your money, right? That's typically what happens. But the typical retail trader, they only grasp at the obvious, and they say, well, it looks strong, right? But this is actually weakness. You're buying into a weak area. There's no strength here, right? What is strong is its history. That is strong. The strength is actually in these levels, the low levels, where it looks like garbage, where you avoid, oh, no, it's weak. That thing looks like it's selling off. Yeah, it's selling off. Look, found support there. No sell off there. Look, found support there. Found support over here, right? Where's the weakness? There's no weakness, right? Those are the areas of strength, not the highs. That's what I'm trying to tell you. Stop being Captain Obvious. Take that Captain Obvious hat off and throw it in the garbage. Okay? So, in terms of this breakout, now the goal here is you have to find a level that makes sense for a smaller time frame trade. It's not this level here. So on the smaller time frame, you're looking for a common level. It's not that hard, right? You don't have to be an expert trader to figure this out. This old resistance area, my students know this, is likely to be a support, right? As the market goes ahead, right? As the market continues. That is where you should be looking for the long setup, okay? Or, I mean, if it breaks through that, which is possible, then you're looking at that support. Those are your levels. Now, if the market delivers that scenario, you now have an opportunity to participate in this breakout that's risk optimized. Because let's say, for example, let's say you're taking this level right here, it pulls back, starts to turn, shows confirmation, right? That's 28.7, okay? Your stop in that situation, right? 28.7, your stop on this time frame can be somewhere around here, okay? Not the bottom of the candle. You're looking for the swing low. So what is that? 27, what are these lows here? 27.889, is that the low there? 27.816. So that's 27.8. Okay, hold on, I got the wrong numbers here. So 28.778, and then we're looking at, okay, got it. So you're looking at about almost 1,000 points, maybe less, okay? Maybe you can tighten that up a little bit less and make it like a 650 point move. That's better than 3,000, okay? And if that's going to be your risk, 650 point risk, then you should be looking at least for 650 points. That automatically determines your price target. You don't sit there and say, well, I think it's going to go to 33K, so I'm just going to hold it till then. That's an opinion, which is going to get you in trouble. But if you do it based on your risk and you say, oh, okay, I'm risking 650, I should be looking for at least 650. Okay, and that's reasonable for this time frame. And this is how my trade scanner works when you're looking for trades on there. And basically you're using this process, especially on a 4-hour chart. Okay, so anyway, that's how you play the breakout. And you look for ways to mitigate that risk where your risk is optimized. Now, I have this rectangle over here, right? This blue square over here. That's 25K. That is the ideal support. And that's a completely separate scenario. If the market were to test that and give me confirmation, that is where you have a high expectant swing trade. That's where I can take a swing trade with confidence of a 3,000 point move, because that's the type of support that is, right? And that's the type of move that's within reason from that level. Why? Who can tell me? See if any guys can tell me. Anyone tell me? Why is this level better for a swing trade, 25K? My students should know this. Why is it better? Anyone want to tell me? I'll wait. Who wants to tell me? Anyone want to tell me? And I'm going to get to your questions here in a moment. So thanks for sharing your questions. Anyone want to tell me? Why is 25K better? If you're not sure, say, I don't know. I'm not going to yell at you. Why is 25K better? Historical level, Levant says. Okay, that's not a bad answer. It's a support level. It's a support in a broader bullish trend. If we hold 25K, the trend isn't breaking. Now, let me tell you what that's going to look like, though. Risk, reward better. Yes, Joel, that's true. Raman says high or low. That's also true. Those are all good answers. Now, think about what the market would look like in that scenario, right? I mean, you'd have red candles going into the low. Like the red candles would be looking like this, right? You have these red candles that would be working into their low. So what do you think the typical retail trader is thinking, right? If you have candles going into the low like that, the market's weak. I'm not touching Bitcoin, but you're going into an area of strength. What makes this area strong? There are probably limit orders sitting around all over the place, absorbing the sell orders. That's where you want to be looking for longs, right? That's a high probability. So we talked about going long up here on the breakout, which is less than ideal, but it's still possible if you can optimize the risk. This level is much more better reward risk, much more attractive, probability is better, and the profit expectation is more reasonable. If it turns here, at least testing the high is within reason, right? That's a good 3,000 or 4,000 points. That's where you put on the trade that you plan to hold on for a week or two, or that kind of thing. You understand? Now, of course, it's also possible that it breaks that support and keeps going. That can happen, but we're playing a probability game here. It's not a guessing game where I'm like, well, I think this. It doesn't matter what we think. Stop thinking. It's a probability game. Probability says that there's a greater chance that we turn bullish here, okay? And if that turns bullish and there's follow through, there's plenty of profit potential in there compared to here where we are now, where this thing can fake out like up in this area, and there's much less profit potential. Doesn't mean that it won't do it. It's just a lower probability. Does that make sense? Think of the poker analogy. Okay, up here you have a lousy hand. Okay, you have a lousy hand, but you're still going to try to maybe it randomly comes out. Okay, and you're going to give it a try. You're just going to mitigate your risk. Over here you have a good hand. You have aces. Okay, you have a pair of kings in your hand, and you're like, oh yeah, all right, I'm going all in with this because you got a good hand. Up here, you have a lousy hand. Okay, you have like a 2-8 offsuit, like just complete garbage, and you're going to try to play that anyway. Okay, that's the analogy for these levels, right? You have to think of your levels like that because there is a probability of location, and that the value of the location is going to be a function of the broader structure. Okay, this is not a bearish trend. This is bullish. So if it's bullish, we should expect more from our supports and less from our resistances. So short is really low probability. And breakouts are going to be like a lesser probability. Does that make sense? My whole goal here is to try to give you a reference for thought process to shape your decision making. You should have a process for every trade. The process should be similar or the same, like a routine. Okay, certain steps that you go through to judge. Okay, this is here, this is here, this is here. I should do this. Okay, and it takes you out of the equation. So you're not thinking, well, because what's the mistake people? Well, I think this. Well, that news came out, and I think that. Stop thinking what you think matters. That's an ego thing. Stop thinking because what you think does not matter to the market. People don't like this idea. There are entire empires and businesses built on these opinions, right? Just look at the news. People love opinions. People love good stories. They like to feel right. They like to feel like they're in control. We have no control in the markets, only our risk. That's the only thing we have any control over. So you should be an expert at risk, not in opinions. Does that make sense? So stop grasping at the charts. Oh, look at this oscillator. Look at all these pretty colors, right? That's what everyone is grasping at, and it's the most useless information. Does that make sense? All right. So let's see what you guys are saying here. Okay, cool. So Johan, all right, from South Africa. Cool. Good to see you. All right. All right. So good answers, you guys. Let me see what's going on here on TradingView. Hey, Malad, how are you? It's getting warm and nice. We should, yes, Malad. I haven't forgotten about you, man. I haven't forgotten. I've been actually thinking about that. I'm going to come up with something. Don't worry. We're definitely going to meet up. Okay. I haven't forgotten about you. All right. So let me start opening up the forum here to questions. Let me just look here and all right. So questions. Any questions? Now would be a good time for the questions about stocks and coins, and we can start going over that. If you have any questions about my Bitcoin analysis and my thought process here, let me know. Okay. Again, if you like my content, please press the boost button. Please press the like button. Subscribe, all that stuff. It's helpful. And check the links in the description if you're interested in any of the things that I'm talking about here. Okay. So I'm going to go back and read some of these comments. All right, so we got Alex, right? Dollar looks bullish. So let's take a look at the dollar, and let's start with the bond market, because bond market is really like the king here. Okay, here's the bond market. This is a 10-year note. I always tell people to look at this all the time. Look at the bond market, right? This you want to talk about forecasting the future. This is it. All right. Now, bond market is still stuck at this resistance level. As we know, bond prices are inverse to bond yields. So we got resistance here. We just finished talking about resistance, selling activity. What a surprise. George, why are they selling the bonds? So that's what Seinfeld would say. So look at this, okay? We're pulling back, which means rates are still rising. Rising rates are bad for everything. Now, we had this change. This is, again, that change right there, that dramatic move, which is very unusual for the bond market. That was all that banking drama stuff and people running for safety, right? That's what that was. So here we are, the bond market is still having a hard time. It's not clearing the resistance. This is why long term, I am not very optimistic about stocks. If this thing cannot clear this, it's trying, it sure is trying, and we have a higher low over here, those are great things, but we still refuse to clear the level, okay? So where are we going to be in a few weeks? If I see this bond market in this area right here, I'm not going near the stocks. Okay, not going near. Maybe we're on the verge of breaking out here. That's a possibility, but not the way it looks right now, right? We should have kept going, or we should have broken out first and then pull back and then test this old resistance area as a support. We're not exactly doing that. We're still stuck, okay? And we do have an unfriendly Federal Reserve. They are still on the rate rising agenda, right? Which makes sense here. So you have to keep those things in mind. These are not opinions, these are facts. And the bond market is going to price in the future. It's pricing in 6 months ahead. So this is a very key part of longer term investing. And that's what the bonds are saying. So you mentioned the dollar, right? Let's take a look at the dollar index. Dollar index has been weak, right, in recent time. But the dollar index, like the bonds, is very slow to give us any meaningful changes. Let's take a look here. This is the weekly chart on the dollar index. Now look at this. General trend. I mean, come on, guys. What do you guys think? General trend on the dollar index, right? Put all your opinions aside. Put all the news nonsense and all the other garbage aside, all the stuff we consume. What does the chart tell us here? Who wants to tell me on the dollar index? Who wants to tell me? Anyone want to tell me? Yeah, we'll take a look at gold. That's part of the family here. Okay. Anyone want to tell me about the dollar index? Real quick. What is the dollar index up to here? Bullish or bearish? Who wants to tell me? Levant says bullish. Anyone else? Okay. Stian says it. I see here on TradingView. Stian with the more sophisticated answer. Long-term bullish, short-term bearish. Good answer, Stian. Well, so in this situation, when I pull up a weekly chart, I'm looking at the general trend here. Long-term is bullish. Not only that, but look at the support. Look at this. What's going on here? Are we at a support or are we at a resistance? You guys can see that, right? It's pretty clear. We just finished talking about support and resistance. What should I be expecting here? Do I have to answer that? You guys should have the answers in your mind after what we just went through, right? Should I be expecting buying Here, we're selling. So we're at a support. And look at today's candle. Well, this week, the week just started, okay? But look what's going on here on the dollar. It's so far, we got a little green. That's an inside bar. Now, it's the beginning of the week, so we have a whole week for this to mature. It may close below the support, but it's trying in an area where trying should be expected. That's support. It's a double bottom support in a broader bullish trend, okay? So those are all signs of, I wouldn't be betting on a weak dollar right now. I don't care what opinions are. I don't care what people are saying. Forget all the experts. The dollar is telling us its story, okay? And we saw the bond market is sort of in line with this. The bond market is stuck at resistance. Bond prices pull back, rates rise, and that's a recipe for a stronger dollar. So as we know, stronger dollar is bad for everything, right? That's why I'm not very optimistic about the stock market. Does that make sense? So this is also anything for Forex. Counter euro. If dollar is doing this, the euro is probably doing the opposite. So maybe now, Stian, might be a better time to be shorting the euro, because the euro has been a very tough short in recent months. But but look at the dollar. So yes, this short-term momentum, like Stian pointed out, is bearish, but the bigger picture is bullish. If that bigger picture reasserts itself, we will know when this thing starts taking out resistance levels. Those are minor resistance levels on the dollar, right? So we start pushing those, then we're probably in a broader leg higher, right? Which is bad for gold, euro, Bitcoin, theoretically, right? So you see, like when you have this dollar perspective and we're sitting here flirting with a Bitcoin breakout, right away you should say, that kind of puts a lid on the Bitcoin potential, unless there's some other catalyst that comes along. But if dollar starts to rally and bonds start pulling back again, right? Bitcoin, a speculative asset, is probably going to feel pressure, which means you should not be going long with very high expectations, going back to what the chart was telling us earlier, right? The location. So you shouldn't be sitting there buying Bitcoin at 30K thinking you're going to sell it at 50K because some fool told you, hey, next month it'll be 50K. 3 months ago, the imbeciles on these platforms, yes, imbeciles I call them, were calling for Bitcoin at 40 or 50K by now. We're not there yet. Still waiting. Okay, please don't listen to these people. Please learn to make your own assessments, please. Okay, so that's dollar, right? So good question. So these are markets that you should check anyway. All right, all the time on your own. Okay, cool. So good to see all you guys. All right, I'm just going through the chat here. Okay, cool. All right, so let me go to Trading View. Let me see what you guys have over here. For me, I see some nice questions. All right, hey, good to see you, Donkey. Oh, cool. Been here a long time. Hope you cool. Appreciate that, Stian. Okay, Amsterdam. They invented the stock market in Amsterdam in the 1600s. It's something I learned recently. The Dutch invented the stock market, the first stock market. Okay, anyway, so you guys should be pros, man. Milad, yes. So believe me, Milad, I'm going to get back to you on that. I haven't forgotten about you. Just make sure Mayor Bloomberg is there. We have a lot to talk about. Okay, can you have a look at Tupperware? Tup. Okay, sure, Stian. TUP. I guess it's a stock. Ooh, all right. Tupperware. I remember they used to have Tupperware meetings. I guess the meetings aren't going really well right now. The Tupperware meetings. They need to have more meetings or something, right? That's how they used to sell that stuff. The women used to get together and gossip and sell Tupperware. All right. Anyway, man, Stian, what's going on here? This thing is real. They got problems. They really need to have some meetings. Okay, look, this is the weekly chart. All I see are what? Lower highs, lower lows, lower highs, lower lows. There is not one semblance of strength in this thing. Look at the gap today, right? Look at this thing gapping lower. Look at this, right? So nothing but negative. How much is this thing? $1.25. So you may be thinking, wow, this thing is so cheap. I got to buy me some Tupperware, right? That's what you may be thinking. How much was this thing at one time? I could see what you're looking at here, the double bottom, right? Just going back. This is why it really pays to zoom out on the chart. How much was this thing a year ago? $38.20, and it's at $1.25. Wow. That's it's a little wild, right? So here's the thing, Steven. I understand what you see here, right? You're looking at the broad double bottom. Okay, I get it. But if you're thinking long term, this company, there's obviously a fundamental problem here. When the chart looks like this, there's something going on. I don't know what that is. I would wait. So there's a couple of ways you can go about something like this. If you're thinking long term because you like the price and it's super cheap, and maybe you're anticipating, even if this thing could run halfway back up, right? That's a nice profit. Even if it can get to the halfway point over the next year. Okay, I get it. But here's the thing. It's a little early right now. If you're going to start inventory on this accumulation, it should be super small, like literally a couple of shares. I mean, it's a cheap stock, so you want to buy $100 worth, right? It's going to cost you $125 or whatever. I mean, okay, fine. Just keep in mind, this thing can go to zero, all right? So, you want to play that game, but this thing, you don't want to get too heavy on this, and you don't want to get too optimistic until it starts clearing resistance levels. That's the first thing you need to see. Your first resistance level on something like this is right here, 472. That's a ways from here, right? That's $3 away or whatever. You have another resistance here, okay, around what, 750. And then you have another resistance here. So you need to start clearing those levels first and then showing higher lows before there's any semblance of strength back in this thing. So if you want to accumulate small and then start to wait for an improving price, okay, I get it. But this is certainly a high risk. There's nothing low risk about this, and it can go to zero. Okay, so that's when I see charts like that, that's what you want to see. You want to see resistance breaks, because resistance breaks in a bearish trend should not happen, right? Resistances should hold, as you know. So if resistances are getting cleared, that means something is changing fundamentally, okay? And that's really where you want to maybe put on ads at that point. But we're thinking long-term mentality now. We're not thinking small time frames in that situation, okay? Where that's a case where you'd be maybe putting on more during those breakouts while carrying a base position. All right, so good question. They assigned financial advisors. Okay, what should be looking at if we want to take? Okay, so I just explained all that. Good question. Thank you for bringing that one up. All right, let me move along here. Let me see what else I got. Great question. Great question. Okay, so let me just scroll through this. Alex says, very bearish people are starting to turn bullish. ZN1 is still not bullish. Okay, well, it looks like people are trying to front run the Fed pivot. Right. So again, all opinions, Alex, pay attention to the price. Okay. I also, okay. Not only, okay. Raman. So Raman's calling up the auto trade here. BTC, 27,929 on the 7th. That was what, Friday. Look for long setups. Thank you, Raman. That was the trade scanner message. Okay, in the channel, 27,929 on the 7th. Thank you, Raman, for sharing that. Yeah, that was Bitcoin. Okay, so some people give me a hard time. They say, well, I want to wait a little while, and you're missing out, man. I hate to use that phrase, but the trade scanner is doing its job, and people don't trust the robot. Thank you, Raman. All right, EMAD, flush or sell more? Okay, these are the answers from earlier. Okay, I'm just scrolling through. Thanks for participating, you guys. Okay, that's how the learning process takes place. Okay, Glenn, RUSDT, R. All right, never heard of it. Let's take a look. R. Now, these altcoins, right? Look at these. Let's go back to a weekly chart first. All right, Glenn, hope you're still there. Look at this thing. Let's take a look at this. And people, before you tune out, you really should pay attention to these analysis sessions, because sometimes we find some interesting opportunities here with people's questions. That's why I do these Q&As, because they usually bring my attention to things that I don't pay attention to, like R. I never heard of this R. All right, so look at this. This coin was at one time $4.84. Today it's 39 cents. So interesting move there. Look at this. What's interesting about this, first of all, it's weak. Okay, clearly it's basically at zero. You have this really elongated out of play consolidation. So it's out of play and forgotten about, right? Now it's starting to get a little perk up here. That's, maybe that's why you're interested. Maybe it's catching your attention. Now, my scanner, by the way, doesn't look for these coins because my scanner focuses only on the highest capitalized coins. Obviously, this is not one of them, right? But here's the thing with something like this. First, you have to understand all these coins, they're either going to be subject to hype, okay, and nonsense, which drives a lot of these crazy moves, or the speculative money, which basically meaning interest rates, right? So if rates are rising, these things don't have much potential. That's something to first keep in mind, okay? So they may have these like little random pops. You just have to realize that these are probably very temporary and they're not likely to go anywhere right now, okay? So that's the first thing to keep in mind. If you want to get involved in one of these things, for one, I can understand you have some pin bars here. You're basically at a support, right? This is a weekly chart, like I said. If you get some sort of breakout, don't expect much. If you can get something like this, what is this, 62 cents? If you can get something up in this area, maybe up into $1, that's a nice move. You take your money and you run because these things don't have any potential right now. That can change. Again, I don't know what they do. I don't know what they specialize in or what the problem they're trying to solve or whatever. But just keep in mind, these are very short-term oriented. If you're going to build inventory in coins, you should pick high capitalized coins, right? And if you want to have a portfolio of some of these, these third tier coins or whatever, these garbage coins, just keep in mind that many of them can go to zero. We are now in the regulatory environment, right? Now the SEC and the CFTC are starting to throw their weight around, and many of these coins may suffer as a result. We don't know. So you have to be prepared. A lot of people are like, oh, yeah, it's so cheap, I'm just going to buy a ton of it, right? You're playing the lottery. Just realize that that's what you're doing. Technical analysis is really not going to help us a lot with this until levels start to get cleared, all right? Your first level on this thing is 67 cents. So if you're buying it now and you're selling it into that resistance, hey, you're doing your job, okay? But I wouldn't expect much out of these until we see cheap money. And the Federal Reserve is certainly not interested in cheap money right now. All right, so please keep that in mind with these. All right, so technical analysis is not going to give us a whole lot of value. And if you're looking to day trade, these usually are not good choices, right? I mean, you're better off with like Ethereum or Bitcoin or a Litecoin or something that has more meaningful movements. All right, does that make sense? So I hope that helps. All right, gold. Levant wants to see gold. So gold, let's take a look at gold. XAU USD, right? This is the gold CFD. Now, gold has been on a roll, okay? But, and Sean's mentioned this a few times. I think Sean had a bunch of gold miners from really low prices, right? Much earlier. And I've been pointing this out with gold. And gold has been flirting with, look at this range. This is a weekly chart on gold, all right? I've pointed this out many times. Look where we are on gold. Just zoom out, look where we are. This is the weekly range resistance on gold. So gold still has a little room to go higher, 2070, right? That's the high. I think is that the highest point? I think that's the highest point. No, the highest point is here, 2075, right? We are flirting with that area. Earlier in the stream, we talked about resistance levels. So what's reasonable to expect up in here? I shouldn't have to answer that question. You guys can answer that question, right? What is reasonable to expect up here? Now, gold is tricky because, gold pulls back a little bit. And I even said, hey, I'd be open to shorting it. If I had shorted this over here, it wouldn't have gone very far for me, right? So it's a tough area to short. Playing these counter trend games is a hard game. And it's not something that I really would suggest to beginners. Now, I have not shorted gold, but I was talking about, the possibility. But this location is not a place to be buying it. I don't care what they say, right? The banks are going to fail. Dollar's going to go to zero. All this nonsense talk. It's all over YouTube. All this garbage. Dollar's worth of blah, 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 right? And everyone goes long gold at the top of the range. bad place for longs, man. If you're going to buy something like this, you want to buy support levels, all right? We're not nowhere near a support level. So if anything, this is a place to unload on all the ignorant people who don't know any better and grasp at the obvious, okay? This is the perspective. Now, can gold break out of this resistance? It can, but we just finished looking at the dollar, right? Dollar is at a support, maybe gaining strength. Bonds are supporting a stronger dollar right now, okay? So we saw that, all that together, and that's not a good argument for gold. And gold is at a really unattractive level. That's how you have to look at this, okay? And again, people get wrapped up in all the drama around gold, and the dollar is worth nothing now, all that drama. And what does it do? It gets you long at the worst prices. And all you're doing is selling your positions to people who got long at good prices. You're taking on the risk at the worst price, and you're letting them out for a profit while you get stuck with the risk, okay? Bad place for longs. That's really all I could say about gold. The momentum is bullish, sure, but we haven't broken out yet. Okay, so until we break out, I'm not a gold bull, right? I am not bullish on gold at these levels. We pull back to a support and we go another try for a long. Okay, I'd be into that. Of course, I'm going to look for dollar confirmation and all that other stuff. Does that make sense? Okay, cool. So let's move along here. Thank you for asking. Let's jump over to TradingView. Let me see what's going on over here on TradingView. NASDAQ 100. Sure, Lentchi. Okay, let's take a look. NASDAQ 100, NSX. Now the NASDAQ has been very interesting. All right. Now I've been noting a correlation with the S&P, NASDAQ, and Bitcoin. And Bitcoin has been just rejecting. Like Bitcoin has just been, hey man, you do your own thing, and I'm going to do my thing. That's what's been going on. It hasn't been responding very well. Or with such a high correlation in recent times. And you have to expect stuff like that, right? The correlations are not fixed. They change for whatever reason. Now, NASDAQ, look at this move. Very interesting. NASDAQ has been generally bullish, right? Since what? I mean, going back to the beginning of the year, this entire move is bullish, right? We had this pullback going into March, and then look where we are now. This obviously can be an effect of inflation, right? And dollar has been weaker over this time. We see dollars trying to change, and the NASDAQ is in a location where it looks like it wants to continue higher, though. So it's conflicted, right? There's some conflict here. What do you do in these situations? Well, for one, don't be opinionated, right? So we looked at that macroeconomic picture. The NASDAQ doesn't exactly fit into it very well at this moment. The NASDAQ momentum is bullish, so you go with the momentum, right? Like I was saying before, probably not a good time to be investing in stocks long term, but short term, this says long, okay? Long term and short term are not the same thing. Please keep that in mind. So, like for example, my trade scanner calls longs and shorts in stocks like every day. So the long stocks, if this follows through, because I know like a week ago, Sean saw this, there was one day it called like 10 shorts, right? And of course the NASDAQ was pulling back. Now the NASDAQ's turning around. So longs are poised to do better now, at least swing trades, temporarily, until we see more of a, what do we get from this thing? Do we get follow through? All I know is right now, this is a higher low pin bar, okay? Higher low pin bar in a broader bullish structure. This thing is pointing higher, right? Do we take out, what is this? 130, I think the high was 132 or a little over 113.2, something like that, right? What's this high over here? Yeah, 13.226. So this thing is poised to make the higher high, which is going to be temporary bullish for stocks. Again, great for day trades if you're in stocks, great for swing trades if you're in stocks. But how far does it go after that? Who knows, right? And with the dollar mounting again, the potential is what's limited. So the structure says one thing. Let's take a look at a weekly chart, right? The structure says one thing. Look where the NASDAQ is on the bigger picture, okay? This really provides some important pieces of information, especially when you are trying to figure out, what should I do? Should I hold on to stocks? Should I take my profits? I mean, look where you are. So while the NASDAQ has shown a short-term bullish trend, it's not exactly in a bullish trend, right? In the bigger picture, you could say it's possibly a consolidation here, right? If you want to say the midterm picture, right? All this, that's possibly a consolidation, sort of like that gold situation, and we're at a range high. So it means don't expect a lot in the future. That's what that means for stocks. Don't buy now thinking, oh, I'm a pro investor, and in a year my Apple stock is going to be twice as much as it is now. That would be unreasonable at such levels. If you were thinking that at the bottom, okay, at the bottom of the range, okay, but not at the top of the range. Does that make sense? So yeah, I wouldn't be. We have a short-term bullish signal developing on the Nasdaq, but I wouldn't be overly optimistic about it, right? I wouldn't expect a whole lot of follow through, especially in light of where that next resistance is. Again, we have a couple of notable reports coming out this week. They can change the tune of this thing very quickly. Does that make sense? So right now, short term bullish. That's all I could say about that, which can shape your stock decisions, whether you're a day trader or a swing trader. Shorts, a tough spot for shorts, right? There's really hardly a reason to be short here. Even though my trade scanner called for shorts, that's why you have to be careful. Use context. Should be expecting a lot out of shorts? Not in this configuration. So if I was going to take a short, I would try to take my money quickly. Okay. Now some stocks are going to be relatively weak, but the Nasdaq doesn't rule all stocks. The correlations vary. All right. Does that make sense? I don't want to be confusing here to people. All right, so good question. Stian, okay, just going back. All right, so I answered all that question. So Metales, NDQ, right? That's the same thing. That's the NASDAQ 100, is it not? Okay, so pound, you want to see pound, all right? Mato, say, how are you? XRP, do you have a suggestion where I can trade stocks with an option to deposit stocks? I don't know. I mean, I'm not sure. You might want to try Interactive Brokers. I'm not sure. I know they have like international offices. I'm not sure though to answer that question. With an option to crypto to the account, they might Interactive Brokers might be a choice for that. I can't think off the top of my head other brokers. You know who might be good for that? eToro. eToro. Consider them. And I'm not an affiliate for either one of those brokers, so I don't get anything if you sign up. Okay, so hope that answers your question. Let me jump back here. Okay, next week takes out the high. Okay, the Dutch also had the first company in the world. Oh, really? Okay, learn something new every day. Kai says Tub is an interesting chart. I just read up on it, and the reason for the company warning investors. See what I mean, Steen? Makes me sad. Brand around, right? Tupperware. I mean, come on. So anyway, all right, you guys. I can't answer. I'm sorry if I miss your question. I apologize. I won't be able to answer everyone's questions. I'll try to answer as many as I can here. All right. So let me see. If I skip your question, I apologize. I'm here every Monday, so you can come back next Monday and ask me again, or you can send me an email, or you can reach out to me in the community. Right. I usually answer within a day. I try. Okay. All right. So a couple more questions. Hey, Noah, how are you? Nice to see you. All right. Can you share your idea about Dogecoin? All right. So here's the thing. I can't do all these. So Matos has been following me a while. Let me do XRP, USD. Let's take a look real quick. So look, these things, understand many of these coins follow Bitcoin as the lead, right? XRP is a highly capitalized coin. In fact, this is the one that my scanner is called XRP a number of times long as well. Okay, I can see why just looking at some of this price action here. Now, XRP, again, you're at a resistance level, right? On the weekly, it's at a resistance now. So that's notable right there. That resistance is significant as well because look what it dates back to, right? That's pretty serious resistance. If you clear that, that would be a good sign. But the thing is, you have a lot working against you, right? We talked about that Bitcoin situation. We talked about the dollar, all that other stuff. That can work against this thing. So if you're going to be thinking XRP, you really should be thinking short-term oriented for now. If you're thinking long-term, then you should go small because there's plenty of potential for this thing to retest lower levels. And that's really where you'd want it to accumulate inventory if you're thinking inventory. So as far as XRP goes, let's just consider some levels here, right? We talked about that weekly resistance. Where's the support? You're looking at 43 cents, right? That's a pretty significant support right there. I mean, look at this, right? Look at this. That's really a good place for swing trades. And if you're thinking of accumulation, you really want to test much lower levels. Give it the opportunity to do that. If it refuses to do that, which is possible, then as you build small, you hold on to some of it and you sell some of it, right? You lock some in. It's always a good idea to do that, right? You should understand inventory management. And you have to have, in order to do that effectively, really, you should have everything sort of categorized, right? Like, is this a day trade? Is this a swing trade? Is this long term? Am I going to build inventory here? How am I going to manage each category? You may have 3 types of trades in the same instrument, in the same market, okay? So you really need to be organized and all that stuff. Anyway, okay, so good question. I sold KUA ETF around 35 to 1, took the profit, and now looking for the next entry. What's your point of view? Okay, JWatt. All right, so so here real quick. Let me just see what's going on here. Do you offer, and if so, where can I get more deals on your private? Okay, would love to get more real time. All right, you know what? A87, send me a private message. I can answer those questions there. All right, or go into the community. That's probably the best way, the fastest way to get an answer from me. Just go into my community. There's a link in the description. It's free, whatever, and send me a private message on there, and I'll be happy to answer your questions. All right, so real quick, Wyckoff method. I don't use it. I know it's been talked about. It's very popular with the fake gurus, but just to sum it up, it makes sense in some ways, but the problem is I don't find any type of methodological way to come up with categories of buy and sell signals. They just say, well, look at this consolidation here, and then look at this one over here, and this is accumulation, and this is this. I think it's too broad. Okay. I mean, I don't use it. I'm basically familiar with the idea, but if the fake gurus are on it, it probably doesn't have a lot of value. That's a good way to look at it. Okay. Anyway, all right. So JWatt. All right, real quick. JWatt is a longtime follower. Okay. So what is this thing? Is this what you're in? Okay. So weekly chart, real quick. You say here that you're looking for the next entry. All right, well, not here. This is the right stock, 35.71. Is this correct? Yeah, those look like the correct prices. Look where you are, resistance, right? High or low over here. So in this situation, JWatt, I would at least wait for some sort of support test, okay? And you have this entire area. This entire area right here is support, right? That entire zone. So you're gapped right now. This thing, obviously, it's very sporadic price movement, which I'm not a big fan of, but you have a zone. At least give it a chance to test that zone and give you some sort of buy signal if you're thinking a swing trade. More ideal would be fake out at support, where it breaks support temporarily. The fake out failed low situation. That would be ideal if you can get something like that. That's how I would treat something like that. But if you're going to go for the breakout, the bullish breakout, I'm not a big fan, man. I'm not a big fan of that. Especially in light of like where the NASDAQ is right now, right? It's a tricky game. Does that make sense? Okay, you guys. So, all right. Again, if I missed your question, I apologize. I have to wrap this thing up now. Again, people, thank you so much for being with me here today. If you have another question or whatever, you know where to find me. I stream every Monday at the same time, so you can ask me then. Also, again, please press the like button, please press the boost button, and subscribe to the channel if you really enjoyed the content, and I really appreciate that very much. Again, if you have any other questions like A87, come into the community and ask me there, okay? And I'll be happy to answer your questions. Okay, everyone, so enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.